Is the real estate market in a bubble? How low can these prices go? Let's see. We heard from BMO this week. They've been tracking the Canadian real estate market for quite a while. This chart shows home prices since 1980. They estimate that home prices have gone up about 3% per year over that time. So they shared this chart which shows this exponential growth of real home prices in Canada since 1980. In green, we can see how in early 2020, we started to deviate from that 3% year historical trend line in blue. It shows us that in the first 3 months of 2022, real estate prices were 76% higher than the historical trend line. We saw an increase in demand for housing, which made home prices trend much higher than the historical average. Then in the spring, we saw mortgage rates start to rise, which made borrowing more expensive. Many buyers have put off buying houses due to the increased mortgage rate. This rapidly reduced the pool of buyers and therefore reduced the demand for properties. Prices started to adjust and are now closer to the historical trend line. If we continue to see the Bank of Canada increase the benchmark rate, we will likely be seeing continued increases in mortgage rate, which will most likely continue to put downward pressure on real estate prices. BMO believes prices will be correcting through 2023. This means we could potentially see a period when home prices could be below the historical 3% growth average. For some, this will be a signal that the market is oversold and may see this as a good long-term buying opportunity. Here's another chart. Based on the data from Q1 2022, we can see how far prices were deviating from the trend line in different regions. Here in Ontario, home prices were up 55.4% higher than the trend line. This is quite high compared to other provinces. We can see that both Alberta, Saskatchewan were trending below the trend line at minus 3.4 and minus 5%. Last week, we also saw a report from Royal LePage who are lowering their expectations for home prices in Canada. They predict sales will be down in the last quarter of 2022, which would erase gains made at the start of 2022. Phil Soper, who is the CEO of Royal LePage, says, September did not bring the typical seasonal lift in the number of homes trading hands in the country, a clear indication that our housing market continues to adjust to higher borrowing costs. Our revised outlook has national prices at just below where we started in 2021, erasing the gains made in the first quarter of 2022. Will Ottawa see prices revert back to where we were at the end of 2021? Condo prices in Ottawa are now $446,000 at the end of September. The average condo property was $394,000 in December 2021. This could mean another 13% drop in condo prices. With rising mortgage rate, however, many are looking for more affordable places to purchase and live. Condos tend to be less expensive than freehold properties. This demand for more affordable units could keep upward pressure on the condo prices. Freehold properties, on the other hand, are now at $643,000 at the end of September. The average freehold property back in December 2021 was $640,000. This seems to show that freehold properties have already corrected to December 2021 prices. When looking at both condo and freehold properties, however, it seems to show that we're still 2.6% higher than in December 2021. In my opinion, this price correction has more room to run if mortgage rates continue to rise. The next Bank of Canada benchmark rate announcement will be on October 25th. Some are expecting a 0.5% increase, while others are expecting a 0.75% increase. This should move rates for mortgages even higher. Now, some cities will see a larger price correction. Here is the UBS Global Real Estate Bubbles Index of 2022. They believe Toronto in number 1 position and Vancouver in 6th position are some of the more overvalued real estate markets in the world. Finally, I'm sharing a tweet and a graph from Steve Saretsky. He's a Vancouver realtor. It shows us the share of mortgage-free owner household by metro area. These are owner-occupied properties. In Ottawa, Gatineau, 37% of homeowners do not have a mortgage on the property. What does this mean for this Ottawa real estate market? Well, with mortgage rates rising every announcement, some homeowners are feeling the stress of variable rates mortgages and are starting to see their mortgage payment rise. The general consensus at this time seems to be that there will be an increase in housing inventory coming from those who simply cannot afford the rise in mortgage payments, and therefore they may need be forced to sell their house. An increase in housing inventory could mean housing prices could come down further. However, data suggests that 37% of homeowners in Ottawa-Gatineau do not have a mortgage and may not be in that position. Ottawa-Gatineau homeowners seem to be in the middle of the pack when looking at other Canadians. This seems to tell us that there is a higher chance that the areas of St. Catharines, Niagara, Victoria, Windsor see homeowners selling because of rate hikes, more so than cities like Barrie, Oshawa, and Calgary. Note that this chart does not show investment properties, and it doesn't show homeowners with homeowners line of credit secured against a house. If you enjoyed the video, please take a minute to like and subscribe to the channel. It will mean a lot to me. If you know somebody that's thinking of buying or selling a house in the coming weeks or months and you think they would benefit from this video, please share the video with them. If you would like to discuss your house, your neighborhood, or perhaps your condo building with me, please reach out. My cell phone number and my email is on the screen. Si vous voulez discuter d'immobilier avec moi, s'il vous plaît, communiquez avec moi au numéro et au courriel à l'écran. Merci beaucoup. Ciao. Thanks.